Good evening and welcome to Traders Group. This evening we need to closely examine what's happening in the S&P 500, re-establish where you should be as an investor, and identify where you should have looked if you're a trader. So got a reasonable amount of information to cover this evening. Let's pick up the S&P 500 because it's on screen, and very quickly I'll just jump back to the weekly chart to give the big perspective, which we did last week. And we're all fully aware that that big blue line represents a trend line from 2016, which needed to be respected for our work probably nearly 2 or 3 weeks ago to be true. That is, that's a major support line, which is the one line that represents the retest of what is a potential, still is potential, very large accumulation phase in the form of a W pattern. For this to be not a potential and be actual, it needs to cross that line at 2800, and it hasn't got anywhere near there. And Alan H from New Zealand makes the observation about based on a candlestick chart, that candles are looking smaller and the movements are getting tighter. And I think you're quite correct, but this is pretty normal for a market that's had a fairly decent move in the past week. If we have a look in our chart, which is a little bit blown up, and look at the price action in relation to the moving average, every day that moves forward from here, you'd have to expect a little bit of a pullback. Markets, as we absolutely are well aware, do not go too far above their average before they stop. They either go sideways, they time correct, or they actually correct in price. So this is a established trend. I think we've been 100% correct in our assessment of the low back in early April, and that low has been a little bit surprising that it's taken a while to break out of there, but it only appears to be starting to do it strongly. But all the evidence is there, both technically from the perspective of pattern and also from the perspective of volume. So from the perspective of obviously price, it's trading above a upward moving 20-period moving average. The trend line's been respected, and there's been a dramatic increase in institutional buy volume in the past week. Hence, I would have to suggest that in addition, I would have to say that even the internal numbers have dramatically changed in the past week. I'll just call out the advancing and declining numbers. They're numbers that I track on a weekly basis to get a sense that what I'm looking at technically on a chart is actually what's happening. The advancing and declining numbers, I'm just going to do the advancing numbers. 4 weeks ago, this is within the S&P 500. 4 weeks ago, there were 200 advancing stocks, 291 declining. 3 weeks ago, there was 226 advancing, 264 declining. Last week, there were 274 advancing, 261 declining. This week, there's 304 advancing, 186 declining. So it says internally, in terms of advancing stocks, in the past 3 weeks, there was a 13% increase, a 21% increase, and last week a 10 or 11% increase. You know, the internals suggest strong internal growth that you cannot necessarily see by looking at an index chart. In terms of the volume of the advancing and declining stocks, the advancing stocks, in terms of their volume, the volume of transactions, are 42% higher than the declining volumes. That's more important than the numbers. So there's a massive shift towards advancing stocks in terms of both numeric increase and also the volume traded. Very strong basis for saying markets going to continue on up. In terms of the new high and new numbers, new highs and new low numbers, last week there were 2 new highs and 10 new lows. It looked pretty useless, but this week it's completely changed. This week we've got 8 new highs and 3 new lows. So There's now two internal numbers that I'm tracking supporting what we're seeing, and I think we are absolutely correct. I've already mentioned there's a dramatic shift in institutional buy volumes. Therefore, the fuel that supports an continuing upward moving market is there into the near future. The only other metric that I like to keep a track of on a weekly basis is the VIX. That's the only internal number that tells me that institutions are buying put options because they fear a market's about to fall, and we have a slightly elevated green bar last night. Probably indicates a short-term pullback in the market, or maybe not, but the overall trend is clear. There is zero fear within global markets. It is in a strong downtrend, and that's what it is. It looks like it will continue on down as the market rises. Other indexes that I think is a good idea to watch, but not put too much emphasis on, is IWM, which represents small cap stocks. Small cap stocks are a lot more volatile, and they are looking extremely strong. Looks like a little bit of a top coming in potentially, but the overall trend is strong to the upside. Coming across to someone mentioned the Qs. I can put up the Qs, but Qs represent a specific sector, which is finance, so I won't put too much emphasis on that. I do like, though, if the fundamental picture, when we listen to the news, everyone says, oh, we're in a globalized, synchronized globalized bull market, you'd expect all the regions, there's only 3 economic regions, they break it up into the Americas, the Asia, and Europe. They're the 3 areas, economic blocks. So we'd expect everything to be, looking really, really strong. And the only way I can glean information in that regard is to look at the exchange-traded funds and look at the internal indices. In the past week, we've had declining triangles, which Alan pointed out 2 or 3 weeks ago. 2 tests of a low, expecting a breakout, 75% along the depth of the pattern. It's exactly what we received. That's the nice, strong breakout from a pattern. And I believe once it crosses its old swing high at around 33, it's absolutely confirmed, but it's already confirmed. So that's EWG, Exchange Traded Fund German Index. DAX, the actual DAX internal, the past few weeks, I've drawn some very crude, what I thought were W patterns on screen. They're not W patterns or not accumulation patterns technically till they confirm. In the past week, this pattern has confirmed, and it's confirmed because it crossed its midpoint. So what has to happen now? We need a pullback, which may not happen tonight, but it is a confirmed accumulation phase. It didn't fail on the way up, confirmed. Coming across to Shanghai Composite, starting with FXI, the Exchange Traded Fund. To start with, we have also been watching a declining triangle, which has not really broken, and that is a little bit of a concern. It hasn't made its move yet, but we'll keep an eye on that. Coming across to Shanghai Composite, the actual index, it is also of great concern. Why? I'll tell you why it is of concern, because the Shanghai Composite is normally highly correlated with metals and mining. Metals and mining, as I pointed out in the past few weeks, have given signals. You should be paying attention to them, and guess what happened? They've gone mad in the past week, and I'll show you the signal that I gave you 2 weeks ago, and I even gave you a list last week to get ready for it. Shanghai Composite, that is a broken accumulation phase. This is what we don't want to see. In fact, maybe not quite. Okay, so what should have happened, it should have gone up and confirmed. What it's done, it's gone up. It looks like it's about to fail. Actually, in reality, it hasn't failed, because it hasn't closed below its previous swing low over here. So if it survives that last plunge and strongly goes up in the next few weeks, it's absolutely fine. And I'll get rid of all this mess and I'll redraw it. I'll redraw it actually now. So it's still in play, the W pattern's still in play, but it is struggling. So I'd have to do something like that, like now. But if it collapses and closes below the line next week, we've got a problem, something to be watched in China. How's this impacting on the Australian market? EWA looks exactly the same as the S&P 500. So it's putting in this big test and retest, strong upward move. The low that we picked in April is 100% correct. Alan was the first in this group to put up evidence in Facebook on Traders Group Facebook, and I back that up, and we are absolutely correct. The implications of this are twofold. One, you should, if you're an investor, be fully committed to this market, and you should have done it 2 weeks ago. And two, as a trader, you should be looking at the highest or strongest sectors in the market to look for opportunity at this point in time. I'll give you those sectors in a moment. How does EWA look compared to XJO? XJO is basically unfolding what we drew. We drew that picture weeks ago, not months ago. Maybe we did do it months ago. An inverted head and shoulders pattern, which will take months to unfold. Why months? Because it's got to get up to the trend line, then it's got to put in a right shoulder, and then it's got to break. That's going to take, I don't know, at least another 4 weeks for all that to complete. So very excited about global markets, but Australia continues to be the laggard indice on the planet, and you know, it's just disappointing. I have reacted to my own disappointment by shifting a lot of money towards the US. My portfolio, that's my super portfolio, used to be 70-30, 70 Australia, 30. It's now 65 gone to the US. It's nearly an absolute reverse. The more I see the unfolding Royal Commission into the banking sector, which is our major sector needed to drive our market up, the more disillusioned I'm becoming. And they're talking about broadening the commission, which I think is kind of a good thing, but it's just not saying anything toward exploding upward Australian market if you've got the biggest sector with weights around its ankles till the end of the year. So if you're only Australia focused in your super, don't expect a great return this year. Just to comment while I'm talking, Mike just mentioned that he watched the China Hustle, which was the Netflix documentary that I mentioned last week, and he just said thanks. You know, is it relevant? I think it is relevant. A lot of information is now being disseminated in very different ways than we would expect, and I think it's important stuff, especially, well, I wouldn't for no chance I would be holding anything to do with Chinese shares after watching that program. Their markets, their financial markets also are so opaque. They're so unregulated. It's not the same style of regulation that we have. It is a really big gamble. And I too believe in the Chinese miracle. I too would like to be a part of it, but I can't see how to get access to their markets. I don't speak Chinese. The equity markets through the US are now proving to be too risky. You can't get direct access. Therefore, I don't know. I suppose there's enough to trade and invest in, US and Australia, and not bother with China, but I'd love to be up there. I'd love to be doing something up there. Okay, so just getting back to, thanks for that, getting back to Australia. Yes, it's looking and doing exactly what we said a few weeks ago. Yes, it's doing an inverted head and shoulders pattern, but we have to go and look at the sectors, which is Ellen just typed me in a message, his next point. The two big sectors that we want to drive the Australian market is XMJ, but we understand that XMJ is interesting, but it is has a subset called XMM, which is the Metals and Mining Index. And we understand, or we can see, because I told you 2 weeks ago to watch out, that this has gone through the roof. XMJ and XME, which is the US Metals and Mining, have making big moves. Why are they making big moves? Fundamentally, I haven't got the answer for you, but technically, I've pointed out many times, if you're looking at sector rotation charts and you've got elements on that chart which on the right-hand side, and they do what's called a right rotation, we are all aware that that is a signal for a major move. And I gave you the example earlier this year of tech, XME. I talked about it last week, and USO. I don't think I talked about it, but it also did what's called a right translated move, which is a big signal for strength. So let's go back to Australia just for one moment. Metals and mining is holding up the market, and we come across to XXJ. XXJ is the finance sector chart in Australia, a minus REITs, and I have previously drawn a inverted head and shoulders pattern on there, but you and I can see that that's probably not coming to pass. As each day passes, and I think, I don't know whether I heard correctly on the midday news service, that CBA has admitted to fraud or something. I have to go listen to it again. Outright thievery, and the directors are now open to jail terms. This is getting very serious, but it's necessary, and that does not look a very good, promising chart. It's been going down since, if I go to a weekly, this is just finance. We've been heading down since, what's this date? May 2017. This has been tracking. I left all the pictures that I've been drawing. I left it. See, back in April, July last year, would have been saying, look, great, W pattern, it's confirmed, and then she had to do the V, and it kept on going. So that wiped that one out. So here we have a declining pattern which continues to decline, and we just need the bad news stories to come out on a daily basis, and she'll break into a new low. Anyone that's holding financial banking stocks in Australia, nut the crazy. And unfortunately, I think there's a huge emphasis within super portfolios for the big four, and also telecom. The worst stocks in Australia are telecom stocks and banking sector stocks. So for those buy and hold, I love bank type people, maybe you're holding for dividends or whatever. Who cares about the dividends if the capital growth of your portfolio is going down the toilet? Seriously, you wouldn't want to be holding any of those stocks at the moment and for the foreseeable future. So what's the highlights on the Australian market? The only highlight I can see, well, all other sectors are generally good, but the biggest highlight is metals and mining. Let's go back to a sector rotation chart, just focus in on Australia and look at the highlights. What's strong in Australia? The strongest sectors in Australia are healthcare, metals and mining, and energies. We'll talk about energy separately. Something interesting happened with energies. If you went back and listened to all these recordings, we talked about oil moving many, many, many weeks ago, and my comments were that it's great that oil is moving, but the energy sector hadn't moved. And in the last week and a half, the energy sector has made its move. It happened very, very quickly, and there's been some ridiculous moves in some of the energy stocks. So the oil contract took off weeks before the overall energy complex took off, and I didn't rebalance my portfolio towards energies, but you can't pick up every single move. I have rebalanced towards metals and mining, definitely. So so I didn't miss out on that one. But energies is a very interesting shift. So energies, metals and mining, information technology, consumer staples, and healthcare. They're your big ones. What do you do? Oh, and I pointed out this last week. There's a hidden one here. Industrials. That's a developing story. That will be, if that maintains that trajectory, it'll be massive. What are the laggards? Well, we just talked about finance. We talked about telecoms, horrible. I wouldn't bother with utilities. And consumer discretionaries, which were looking good, if they don't do a right rotation next week, I'm going to have to get rid of some of my consumer discretionary exposure in Australia. Not in the US. In the US, it's completely different. But in Australia, those stocks are not performing as I expected. So let's jump across, while we've got sector rotation charts up, to the US market. The US market is not necessarily correlated with the Australian market. Different things happen at different times. It's a different economic region. There are some similarities, e.g. the USO oil we know about, XME, we talked about that 2 weeks ago. Tech, extremely strong. Consumer discretionary in the US is still strong. Finance is starting to lose some weakness, starting to lose some strength, but still strong. What are the dogs within the US market? Dogs are telecom. Seriously, don't go near utilities. Don't go near consumer staples. Healthcare is on my watch list, and energies also in the US are starting to make its move. So energies is, we're talking about oil research, oil exploration type companies. So probably the strongest areas that I've got in my portfolio at the moment are metals and mining, discretionary, tech. Once again, I do have finance, and I do have some industrials. Now, I just want you to look at something on screen. So get rid of it all, just bring up industrials. I was looking at industrials a few weeks ago and going, I wouldn't touch industrials. But then I dug deeper and I found some defense/aerospace stocks which are going through the roof. Probably every time they shoot off 100 missiles, the companies that produce these missiles have to, ramp up production. So I am doing quite well in specific industries of the industrial complex within the United States. I did bring up last week a number of different stocks related to some of these strong sectors. I gave you a group of stocks, metals and mining. I gave you a group of stocks with consumer discretionary, and I gave a group of stocks with tech. They were the three that I picked. Let's go check them out. Some of them I own, some of them I don't, but they're the three groupings that I thought would be great hunting grounds for potential trades, and or you include them in your portfolio. Let's just quickly zoom through them. Just give me 1 sec. I'm just flicking it across. Okay, so remember last week, none of these had made a move, and they've made some explosive moves like Amazon. Not that I own Amazon, and I can't afford it. I haven't got that much money to spend 1,460 US per share. Oh, I can't even afford that. I wish they'd split this up so I can get on board. Netflix, I definitely own Netflix. That's gone ballistic and had a huge move the other day, which is fantastic. So anyway, as I go through all these stocks, I gave you this list last week. Some of them haven't really made their move. Some of them have. But it's all good stuff. This is one of the sectors where I'd be focusing my attention, and my list is not comprehensive. It's just a list. Tech, SPLK, looking good, steady. NOW, looking good, steady up. SSNC, looking steady. Everything has had a reasonable move. That's a really good breakout. Remember what I said to you a couple of weeks ago? This is a high momentum stock. I don't need quantitative measurements of strength to tell me it was high momentum. Why? Because the depth of the pullback was residing above the previous swing high, which tells me you should get a strong break. Guess what's happened? Strong break. ADBE, Adobe, we use it every single day. FTNT, that's it. Nice, strongly breaking stock. I only gave you this list last week in anticipation of a right translated XME on chart. So some of these stocks are just making their move, but significant moves in the last week. TX, and this list is tiny. I'm sure you could find lots of stocks that have gone crazy. GGB, STLD, Vale, VALE, beautiful gap. I think I might own it. Hopefully I do. TS, X. Now these last two are material stocks. They've got nothing to do with metals and mining. They're just two that I think I own one of them, and they're connected to wood production. Okay, so everything's looking good. There's lots of opportunity, and I'm hoping you've taken advantage of it. Let me track across to other elements of the markets, namely currencies. We'll have another look at energies, gold, and let me start with checking out the currency markets. And as usual, I'm just going to stick with the FXA, which is Exchange Traded Fund relating to the Aussie dollar, and you all know why. If I've got a large holding of Aussie dollars, if I've got a large holding of US dollars, my portfolio is sensitive to currency movements, and I'm very aware of it. And last year, that was actually to my detriment. But I still maintain a free-floating portfolio currency exposure because I'm not going to hedge the hell out of my currency exposure. I just find it, in the end, it costs money. So we've got the big picture for FXA. It's clearly in a particular trend. No one needs to work that out. It's come back to the trend line, and it's at this point you would expect it to bounce. So that's a weekly chart coming down to a daily chart. What does a bounce look like? A bounce looks like a break of trend, some sort of accumulation pattern, a market which starts to do higher highs and higher lows above a 20-period moving average, and it's well supported by institutional buying volume, all of which have come to pass. That's all in play. So the market has broken trend. I can't really make up a pattern down here. It's really making it up. We can call that a test and a retest. It just probably needs to back off, do another higher low, and you've got yourself a trending Australian dollar to the upside. If you were going to forecast where it was going to go, what could you forecast to using this channel? 83 cents maybe, 82 cents. Depends. Who knows what happens in the interim, but it is starting to trend. If the Aussie dollar is starting to trend to the upside, that means that the US dollar versus ASX is probably starting to break down. Looking at the reverse traded on the Australian Securities Exchange, it has been in a nice uptrend. That's a weekly chart, but we can see that the overall trend is not up, it's down. Coming down to the finer detail, we'd expect this to start to break trend, do a retest, and then fail. That's the conditions we need for the technical definition of distribution. So that hasn't exactly happened. I would expect a bit of a rally and a failure, and that would equal an M top. I'd also expect a dramatic shift to the negative in negative institutional selling volume. That is a true statement. So both the up and the down side of this argument are supported by participants within the market to drive the market down in this case and the market up in the case of FXA. Coming across to gold. Gold has been a little bit difficult to analyse because I was expecting the gold market to retest its low of its channel. The gold market is obviously very strong to the upside. I just want to come to a weekly chart, but it's in a when I say strong to the upside, it's in a well-defined upward moving channel on a weekly chart, and I expected to get to the trend line, but that's probably not going to happen because there's this inverse relationship between US dollar and gold. Therefore, in the past few weeks, I have been looking for a shift in volume, and last week I said uptrend not supported by volume, but this week I'm saying the uptrend is now supported by a major shift in volume. So within the last week, something shifted within this market, and now I would suggest that this is the beginning of a trend which should, at the very least, work its way up to the top of the channel. I am completely uninterested in gold to invest in because of its low momentum nature. It's interesting, and I have people in the room that are interested in, that's why I do it, but that's where it ceases. Coming across to, one moment, coming across to, one moment, I'm just checking my pad. Just coming across to the energy market once again. We saw it on a sector rotation chart. Let's look at it on an actual price chart. We are already aware of USO. Interestingly, USO has been moving since February, and I've been drawing squiggles on chart, and I would have been saying that lots of volumes kicking in, and drawing arrows, and it's broken into a new high. Interestingly, the XLE, that is the complete complex of energies, the energy complex, which includes everything, not just oil, didn't make a move until just last week. So on the 10th, it's only the 19th, it's only 7 days ago, where that the energy complex has made its move. So I'm just going to jump back to USO. Bill, I'll deal with your question in a moment. Back to USO. USO has been trending since Feb, and XLE has been going sideways in all that period. And can you remember what I was saying? I was saying this is interesting. USO, XLE is going nowhere, but USO I suppose as an industry of the energy complex is making its move, and then it all happens. If I had half a brain, I would have shifted and bought a whole heap of energy stocks, and the leading indicator was oil. Did I do it? No, I didn't do it because I'm too focused in other areas of the market. And then I really just rub a bit of salt into my own wounds. I go and look at some energy charts, and I see stuff that I would have picked up, stuff like PSX. The moves are ridiculous, like 10% moves. CVX, Chevron, got big offices in Perth. There's some really big moves here. Now, is it too late to get on board? No, of course it's not too late. If there's a trend evolving in the energies for the foreseeable future, what you'll find is markets don't go up straight away. And some of these are just in their first break. So the key with energies, if you want to get on board on energies, wait for the next pullback. So when the whole market pulls back, that is, the S&P 500 has a retest of its moving average, you will find that all of these will have a retest of their moving average. Do not get in on massive extensions, that's silly. Wait for the pullback and then join in on energies if that is of interest to you. But I was surprised today because I remember clicking these only a week ago, and I was going, yeah, they're great, they're still going sideways, and just as you take your eye off it, it makes its move. But that's the markets. You've got to pre-position. You can't trade after the fact or buy after the fact, and that's fine. Bill had a question on gold. Bill, I'll come back to that shortly. I just want to go to back to the XME, and I didn't want to pass over it so quickly. Just give me one moment. So oil is a new opportunity, and XME also. I don't want you to think that you've missed out on it. This is the beginning. I mean, the translation on the sector rotation charts only happened in the last week. It looked like it was doing it, then it did it, and now the market's starting to make a break. Yeah, that moves pretty damn quick, but once again, it's unsustainable. And the reason it's unsustainable, for reasons we all know, the markets can't go that hard that fast. They have to back off. They will back off. They'll come back to the average, and there goes your buy point. Even I will add probably, if I've got some spare cash, to my metals and mining. I only bought US stocks. I didn't buy any Aussie stocks. And when I look at this Aussie chart, it's pretty damn dramatic. Just give me XMM. That's an amazing break today, and I don't even know what's driven it because I haven't caught up with it. Just give me one sec. Energies, mining. Here we go. It'll be the BHPs, the Rios. Yeah, the Rios are breaking out. Rio, that was BHP, Rio. Yes, so this is all just happening in the past week and a half. I do own some of these. In fact, what do I own in Australia? Give me one moment. Australia, what do I own? Okay, this is what I own in the Australian market. I think I gave this to you last week. I own IGO, and that had a 7.69% shift today. Very interesting. I think I said this to you last week. I own OZL, hasn't made a move. I own CSR, pretty good move in the past week. And this is Alan's LYC. I own LYC. Thank you, Alan. So that's my exposure to the Australian market, and my US exposure to metals and mining is only 3 stocks. I own TX. I got that before it even made its move, so that's absolutely fantastic. GGB, fantastic, and STLD. That's my exposure. Not huge, but I'm happy because remember I've got it in I've got 2 portfolios, Australian US, so I've got enough stocks spread across 2 markets to be happy with that level of exposure. I'm just going back to a comment Bill's made. Okay, I just want to go back to the gold chart. Bill's asked a question, and I need to bring up the chart. 1 moment, please. And it's loading the chart again. It's just taking a few minutes to load. I saw NBN technicians at the end of my street today. So finally, my office will get probably a degraded service. Bill's question is, I didn't really observe this, Bill. Bill's question is there any reason for frequent gap behaviour in GLD? I actually haven't got the answer. I don't know. Alan, why is there gap behaviour in GLD? It's actually, I don't know. It's just give me 1 moment. I want to go down and see if I've got an actual gold chart, a commodity gold chart. Just give me 1 moment, which I believe I have somewhere. GC. Okay, this is a gold futures chart. I just want to see if there's the same behaviour. Yeah, so, okay. Okay, here's my only explanation. Alan says fear, which is probably right, but gold's traded on the CME on a continual 24-hour cycle, and the contract we're looking at is at the exchange traded fund, traded between the hours of 9:30 and 4 p.m. So the only answer I can give you, Bill, is the gap is factoring in the overnight movements of the chart. So once again, that's gold futures, which is trading all the time. And we come back to the gold exchange traded fund, and it does have gaps all over the place. My only explanation, and it's probably correct, actually. That's probably correct. And Bill's agreeing with me, says, yep, futures chart is quite different. That makes sense. Okay. I just want to review some stuff that we've been following for months, and I'm glad to be not a part of it. And they were, I don't know what that Facebook post is coming up, I wish they'd go away. Things like these were newly released exciting opportunities, which I was excited about. I actually made great money from this financial year. But I'm just going back because it's a lesson that I've learned. And that is when their IPO comes out, they have this huge surge of interest, and then they fade. And the pattern is consistent. I said that, and I changed my behaviour. I actually was a bit overweight these last year, and it was to my detriment because I believed in them a bit too much. And I don't hold them. I grab a chunk of change and I leave the market. That's my attitude. If you're trading IPOs, which are way outside the ASX 300, I think you've got to be careful. A2M is not one such stock. I don't know what's on my list. TTT was one. TTT was one that I got in and out of. I got in on the opening and got out at 80 cents. The market went to $1.70. But since $1.70, it's just, wasting away. MMJ was a stock that we looked at, was based on marijuana. Marijuana still wants to be watched carefully. If they're talking about legalising commercial consumption, just like alcohol of marijuana in Australia, which they were on telly the other night, it putting aside the ethics and the medical problems, which I believe it has, I've got my own view. I don't think it should be legalised, but it's still as a business opportunity. There will be companies which will be retailing commercially grown, government-controlled marijuana. That's so crazy, but it's not looking good at the moment. Other pretty interesting things. 3AD. I was excited about this. I bought it right on the opening bell. I didn't exit at $5, but I did make really good money. But I've sort of let them go, and that's the way to go. So if you give me an IPO, will I trade it? Yeah, certainly. And then I'll do what everyone else seems to be doing. I've got a funny feeling there's some trading club doing this. There's some group of people. They go for it, and then they all get excited. They pump up the stock, and you need to be able to have the discipline to get out on the upward swing. That's all I can see in that group. And that group we've been looking at for now years. I just thought I'd leave it there to visit, and I visited it today, and it's all a disappointment. You wouldn't want to be holding any of it. Okay, I'm just checking out some of the questions on the board. If you've got any question, now's the time to type it in. Okay, Alan's just put up a prospective opportunity within the Australian market. Just give me one moment. And I am just bringing it across to my portfolio because Alan said I'm watching NXT. It is a cloud-based and data storage company in Australia, and I own it, and it's looking good. And I bought it right at that low in April, so I own that one. So I'm not sure whether you mentioned that before or it got picked up in my searches, but that was one of the stocks that come up on my in my information technology search in early April. By the way, Alan, we are constantly getting Wild New Zealand wildlife programs on telly. I've got to get across there. I didn't realise how remote and how beautiful the southern South Island is, or the bottom end of New Zealand. I don't know why I haven't been there. I've got to get over there very, very soon. It's on my holiday list. It's on my bucket list. So anyway, back to reality. NXT, I believe, is a really good stock. This is why it's really good, just from a technical perspective. Let me clean up. And Alan answered to my New Zealand coach. It's where he grew up, and it's where he goes fishing. I saw some of the trouts being pulled out of the lake on television. I can't believe it. Anyway, I've got to concentrate. This is why this is a good stock. See the pullback? It's the same as I've drawn on other stocks. The depth of the pullback in relation to the previous swing high, that's what attracted me to this particular stock. Technically, of course, I picked it up on using strength measurements. So that's one element. The other element, which I'm now going to check is in play, is volume. There are two volume charts that I generally watch. I like to see both of them in agreeing with each other. But just of late, they do agree with each other since March. It's not the accumulation and distribution chart is tracking up, and the on-balance volume chart is very strongly up. So it's on the basis of pattern, strength, and volume that I included this particular stock into my portfolio in early April. Guys, I think I've run out of words. If you've got any things to say, please contact me. For those people like Bill, Barry, Brian, if you are considering trading spreads on SPY, I've had my second trade in a row, which is a success. And the reason I started trading spreads is because of what we've been looking at on the chart within the S&P 500. This should be a extended move to the upside. This is the time to trade spreads. Looking at the overnight market's down slightly, so we're probably right. This market's due for a bit of a pullback, and it needs to have a rest to come back to the average. So I would anticipate a sideways or downward move in the coming nights, and all is well. That's it for this evening. I've got nothing else to say. I've either been talking too much or I've just run out of material. Thank you, everyone. I look forward to seeing you same time next week. Stay safe. You've got plenty of material to work with. Thank you.